Hello once again, my name is Anupam Anand and you're watching Freedom English Channel. Today we'll be talking about the fluctuations. Not the ones you get in the airplane when you're traveling in the air, and not even the ones which you get in the amusement parks while you're on the rides. No, these are the market fluctuations we'll be talking about, how it goes up and down, why it goes up and down, how does it affect you and me, and much more in details in this video. So let's start. So these fluctuations can actually hamper anyone and everyone who are related to the market, whether you are a buyer, whether you are an investor, businessman, or whether you are a trader. Everyone in the market is affected because of these fluctuations, and that's what we will be covering in this video. Key factors that are driving these fluctuations in the market, we will be discussing that. Let's dive in quickly. The fluctuations means volatility of the market. Market fluctuations are easily called volatility of the market. So the volatility denotes price fluctuation. The price will go up and down very easily, very rapidly, and the perfect example for the market volatility, the price fluctuation, was in 2020. So during the year 2020, we had a lot of fluctuation because of the pandemic, of course, because of the market which was closed, which was shut. The trades were not happening, the exports or imports were not happening. So yeah, we saw the fluctuations during that time a lot. Before we go ahead, fluctuations or volatility, it's quite a very negative word in day-to-day life. But fluctuations or volatility index, also known as the fear index, is quite important in the stock market, because this fluctuation or volatility shows that there is opportunity in the market and it will give you better outcomes. All you need to have is patience. Alright, now let's talk about the key factors that affect the fluctuation of the market. So as we discuss the factors of fluctuation, economic indicators fall in place for any country to decide the fluctuations. Now, if the GDP of the country is quite good and going ahead with a good pace, of course the fluctuations will be quite nominal. If the inflation is high or rate, that also will affect the fluctuations. Or the interest rates, if they are high, like in India, RBI raised the interest rates, and after that many of the investors had to think about their portfolio. So yeah, the interest rates also matter in the fluctuations of the market. Moving ahead, another factor for all the fluctuations in the market is the geopolitical events. We have been seeing a lot of wars happening lately, and the trade restrictions as well, or any such sort of disagreement between two countries or multiple countries can actually fluctuate the market and make it volatile again. Wars like India, China, Russia, Ukraine. So yeah, this was another major factor, geopolitical events that actually can hamper fluctuations of the market, which we have been witnessing since last couple of years a lot. The next factor that fluctuates the market is the corporate earning. How the corporate, or how well the corporate companies are doing in their respective field or the sector. For example, if they are in a particular sector, like if they are into software. So we have HCL, Wipro. So even if Wipro is doing good, other companies like Wipro might be doing good because the corporate earning is happening, at least for one. So overall, the quarterly performance of the company will decide how the market will fluctuate based on the sector it is in. Alright, so the next factor that will be affecting the market fluctuation would be the investor sentiment. That is of course important. If you are an investor, you would know better. I mean, sometimes it's the fear that actually drives you, sometimes it's greed, and sometimes it's the market trend. The trends of the market also make an investor go up or down, or if they want to spend or if they don't want to spend. It depends on these factors: fear, greed, and trends. If you are an investor, you would know this very well, because sometimes you feel like, okay, I don't want to invest now, the market is really not safe for me, there are so many wars going on, I want to keep my money safe, or I don't want to invest in the market, rather I want to invest in a safe place like gold. So yeah, there are a lot of decision making happening because of these factors as well. Fear, greed, trends, and the investor sentiments can change anytime, and followed with that, fluctuations can happen in the market. So let's have a quick look once again at the four factors that are driving the market every single time. First, we have the economics of the country, wherein anything can happen. The election can happen, the budget announcement can happen, and the market can fluctuate depending on the election, the budget, or the economic of the country. Moving ahead, we have the geopolitical reasons wherein the market can fluctuate. It can be a trade war, it can be a war, it can be a simple negotiation that can go wrong, and it can affect the market very bad for the respective countries who are there on the negotiation table. So the major factor over here will be wars that actually affects a lot of countries, as you all know. Moving ahead, we have the corporate performance. So this is based on the performance of the company or group of companies in a particular sector. Like for example, we have the winter season coming up and the power utilization overall in the country will be really high. You might get to see a lot of fluctuation in the power market like Tata Power, like Adani Power. And of course, it depends on the quarterly results or the performance or the profits they are making in their company. And of course, lastly, but very importantly, it depends on the investor's mood. How much they are ready to invest in a particular time or a particular period of time. Now, for example, this year itself, we had a lot of investors moving out of the Indian market because we had US elections, wars going on, and a lot of other reasons as well. So from last couple of weeks, the Indian market has been quite volatile because the investors have been pulling their money out from Indian market. So overall, the fear, greed, and the trends actually drive these factors: the investor's mood, fear, greed, and trends. So yeah, that was a quick glance over the key factors that drive the fluctuations in the market. But these fluctuations and volatility actually scare a lot of people, and people somehow become very hesitant to invest in the market because of these fluctuations. But yeah, if you are one of them, if you are scared to invest and if you really don't have any idea about it, please make sure to download the Freedom app and you get access to 10 plus courses in finance, farming and business, wherein you get dedicated videos to learn about the stock market, how to invest, where to invest, all the right knowledge and insights in just one single application, Freedom app. Please make sure to download and start learning and smart investing. So yeah, these fluctuations or market volatility can actually scare you before investing. But there are people who sail through these fluctuations and make the best of this, because these fluctuations, like I said, are opportunities. So let's talk about how to manage these fluctuations or volatility of the market. Alright, so the fluctuations can actually scare you, but these are the few ways wherein you can save your energy and be a little less stressed about the fluctuations when you are investing your money. So let's talk about the first point: diversify your portfolio. The very first way to make yourself less stressed about investing money is that diversify your portfolio. This is very important. Make sure your portfolio is spread across different sectors. For example, if you have been investing in just particular one sector, FMCG or solar, you should think about diversifying your investment into different fields or sectors and even across the geopolitical boundaries. Overall, I'm trying to say that diversify your portfolio, invest in different places so that a certain fluctuation in a certain sector does not affect you. Okay, the next factor that you should be keeping in your mind while you are investing your money and you want to be relaxed is avoid panic selling. Okay, the market can actually go up and down, and when it goes down, a lot of people, a lot of investors think that, okay, my money is going nowhere, it will be lost. No. There will be no loss if you have patience. Yeah, you need to have a long-term patience. Like I said, the last point is very important: focus on long-term goals. Now, if you start panicking and if you start selling when the market goes down, you might be in a huge loss. So better have long-term goals and stick to your plans and stick to your investment. If you have done, have trust on yourself. I'm sure you have done your research before buying or before investing your money. So have that patience on yourself, trust on yourself, and focus on long-term goals. That will help you manage the fluctuations or the volatility of the market. So to summarize, market volatility is given by multiple factors, including economic data, geopolitical events, corporate performance, and investor psychology. By understanding these drivers and staying disciplined in your investments, you can turn volatility into opportunity instead of risk. So yeah, make sure to keep these factors in mind, and also the factors that will help you to invest safely. So I hope this information was quite helpful, and henceforth, whenever you're investing, you'll put your money at the right place at the right time. If you need more information and more help, we have a dedicated course on the stock market. Please make sure to go ahead and download the Freedom app. You get access to 10 plus courses of finance, farming, and business. You get to learn a lot. Start investing from now, but be a smart investor. And before I say goodbye, please make sure to like the video, drop your comments, and share the video with someone who needs this information. Also, please make sure to subscribe if you haven't yet. See you in the next one.